Stop looking at the stock market to determine the health of the economy. You're never going to find it there. If you watch the news, you're only going to get one side of the equation. I am here to show you the other. In today's video, we're going to look at what's happening with the consumer. This is extremely important. When you start seeing all these different data points, piece them together, it's going to make a lot of sense. Then we've got to discuss what you, the individual, can do. Let's begin. You came here for the truth, so let me unveil that for you. It's just going to get paid when it gets paid. Balance carrying cardholders crunched by the Fed rate hikes. On average, people are paying about $6,000 on their balance. Imagine at 20%, this will crush you. Now, it's not just that. We've got buy now, pay later services that are being used at record levels. You've also, on top of this, having very soon right now, having the student loans that were not needed to be paid back for 3 years. Now they need to be paid back. What do you think this is going to do? Of course, the consumer is going to get even more crunched. This is important to realize where we are at in the next little while. The UCLA students who live in their cars, it is not just this one school, well, just one area. You are seeing people that are taking on a lot of debt in order to get into a school, hoping in the end they can pass, hoping that the debt isn't too bad, and then land a job soon after so that they could pay down the debt, so that they could then move out of their parents' home or out of their vehicle and get on with their life paying down this debt and trying to go through the 9 to 5, the rat race. This is not a good future. Unfortunately, I understand people want to do this. The vast majority of people are going to a school, this university, college. They're going into this world and they are going to come up short. That is an absolute fact. And I'm going to show you something towards the end of this video, which is not exactly positive for a lot of people going into the wrong areas. They are putting their focus, their attention, their money, getting into tens of thousands of dollars, even sometimes over $100,000 of debt. And it's all going to be, in the end, a big waste. I'll show you why. But here, let me do this first. According to Bank of Canada's recent monetary policy report, growth in our real domestic product is forecast to come in at 1.2% for 2024, 2.4% in 2025. But TD, okay, this bank is saying that they're calling for 0.5% and 1.3%. Wait a second. Well, they're saying the consumer spending is going to be contracting. And that's because of what's happening with interest rates. So think about this. When you factor in other things I'm talking about with the student loans in the US, with the student loans, and you look at so many other things, you've got to realize that the consumer, they're going to spend. They're going to use the buy now, pay later. They're going to use their home equity line of credit, but they are not, of course, not able to spend as much as they wanted to on the things that they did before, simply because it's too expensive. Now, I'm not saying that people are going to be conservative. They're going to put away so much cash on the sidelines. You and I would do that. You and I might have made those good choices. But the vast majority of people, they just don't. There's something important about this, though. I don't want you to be one of those people that goes out there and makes the wrong decision. I want you to be the one that people in your family, your coworkers, they come to and they say, you know what, I just need to know, what do I got to do? I remember talking to somebody who said, they believed that, or I should say they didn't believe that paying down in the debt avalanche method, which is essentially paying down the highest interest rate debt first, would be the appropriate way. They were paying just the one with the biggest debt that they had, and it was never coming down. You've got to go based on interest, because overall, when you look at it, let's say you had $100,000 of debt, you want to pay with the one with the highest interest rate. And that's just a matter of fact. But people don't know these things. I want you to be that type of person who's getting those people coming into you, that has these discussions so that you can help people out too. It is a very important thing that we get into the financial education aspects as best we can, just the basics, how to get out of debt, how to, when to use debt appropriately. Canada's standard of living is in decline, has been declining for years, and isn't poised to stop declining for at least a generation. Look at that line. And I put this in the title and people get freaked out. But why? It's because the currency is becoming worth less and less and less, or you can call it worthless. Despite turning in solid headline growth in recent years, Canada has lagged behind the US and other advanced economies in terms of standard of living performance. Look at it. An analysis released by the Business Council of British Columbia found that Canada was one of the few advanced countries whose citizens have a lower standard of living than they did before 2020. Our economy is simply not as efficient or productive as it could be, nor is it generating the real income per person needed to sustain our standard of living, okay? That should hit home. That should make you realize what's really going on. China stops short of direct consumer support to spur the economy, trying everything they possibly can. This is going on in China, in the US, in Canada, all across the world. They're doing whatever they can to get people to spend more money, and it is very difficult when interest rates are higher. And even Gwyneth Paltrow is listing on Airbnb her guest home. Now, I think there's a business reason behind this. It's not exactly that she needs some secondary income, but I just wanted to put this in there, hopefully to make you laugh a bit. But that's what's going on today, where people are doing anything they can to bring in some additional income because of rising costs. And you've got this to worry about. Saudi Arabia to extend voluntary 1 million barrel per day crude oil production cut into September, suggesting that they would do this potentially even further. And that means that you will have the prices of oil, gas, and so on be still, too high to become, an issue for people. I think this is, of course, burdensome when you see oil. Depends on when you're seeing this. It's $70 a barrel, it's $80 a barrel. But ultimately, that is a factor. If it drops too low, you've got some fundamental problems. If it's too high, that means we're likely around the recession. So let's see what happens with that. I want to show you what's going on with the banks. Very important indicators that I'm about to give you right here to tell you what's actually happening on the business side. You might see your neighbor's home, it comes on the market, and 2 days later somebody buys it over asking price. That's not the economy as a whole. You got to look at this type of stuff. That's why you're subscribed to the Money GPS, because here is where it's all going to be detailed for you in simple language. Look at this, okay? The red line. Net percentage of domestic tightening standards for commercial and industrial loans to small firms. That is now below 50. All I'm trying to show you here, in addition, by the way, to the small business optimism index, have both declined, contracting big time, and they haven't stopped. Do you notice that? They have not stopped. 2020 comes through. Okay, it's a bounce back. Now, declining. Inflation is taking hold. And of course, you're not going to get those loans out there. Of course. That's why in China, they're doing everything they can. They're saying, we need that real estate market, $62 trillion real estate market. We got to pump. We got to do everything we can. Banks, you better loan out more. It's the same kind of situation inside the US, Canada, and other places. Just look. Banks report toughest loan standards in years. This is the net share of banks tightening loan standards for large and mid-sized businesses. You could see that 51%. Okay. All I'm trying to show you is that the lending standards have absolutely tightened. Of course, not something that should be a surprise to anybody. Many small US banks are not ready to borrow from the Fed in an emergency. They're borrowing at a higher rate. They can't do that anyway. I don't know what's going on here and when this is all going to change, but I can tell you things are not able to exist in this world the way they are with moderate interest rates. They can't. They absolutely cannot. Why home prices haven't fallen more as the Fed hikes rates? I just want to make this very clear. Your area that you live in, maybe it's a subdivision, maybe it's a city, you look at this, well, there's only so many homes in that area. You've got the schools in the area. Maybe people have their family in that area. You've got interest rates that have moved up considerably. There's only so many moving parts here. If people are not willing to move out because they don't want to get a mortgage at 7%, they're going to say, I'm just going to keep put right now, not going to move. I'm going to stay here. I'll wait for interest rates to come down. Then we can get moving again. We're not going to refinance at these levels. We're going to stay right where we are. Different scenario for the US as in other places where, you're going to get that 30-year mortgage and you're going to ride that out to the very end at that rate, which is crazy because other countries don't have that. Then you have other people that were getting into variable mortgages, extremely dangerous. I would definitely stay clear of those. Even now, as you expect interest rates to drop, I wouldn't even do it. I would want a fixed rate, and if I wanted to change later, pay the fees and make that happen, okay? So this is the way it goes. Tightening standards, people not moving on the commercial side, and of course on the, as you see on the consumer side. But look at this. AI is on a collision course with white-collar, high-paid jobs and with unknown impact. 1 in 5 American workers have a job with a high exposure to artificial intelligence, according to Pew Research Center. It's unclear if AI would enhance or displace those jobs. And I think you know what's going on right now, okay? There's no question about that. Absolutely no question. And it's white-collar workers, the individuals that are trying to build things. Those jobs are coming. They're doing the factory workers. You're looking at Walmart. You're looking at Amazon. All these big fulfillment centers are using robots. Why? Because they're more efficient. They work 24 hours a day. They do their thing, and that's it. Workers want to get paid more? Oh, sure. Well, we're just going to put Flippy the robot there. We're going to put Chippy the robot. We're going to put Avocado, the avocado making robot, the guacamole making robot at Chipotle. These are real things. They're happening now. They're being put in, the systems are put into place. You have a problem because if they lay people off, they're not going to bring them back. This is why we need to be on top of it. You can get into Class Central. Class Central is a website. I don't have an affiliation with them, though I should mention them so many times. Class Central, this is a place where you can learn about AI, robotics, automation, and this is from MIT, Stanford, all these other universities, but for free. For free. They've got stuff there. Class Central, check it out. But of course, if you want, you got to get onto the Discord where I will tell you everything, breaking it all down. I've got way more stuff coming. This is just the basics. I've got the money mirror method, how I was able to determine that at the market bottom, I was able to tell you when the market bottom was from September. I was saying, hey, October, and I was able to do that. Why? The money mirror method. I describe it right here on Discord. How do you get that? It's right down below. Click that link, go over to the Discord, log in, check it out, snoop around, and also you're going to see about 1,000 other like-minded individuals. Chat with them. You will see how this is all working. I will message you. You will message me. It's going to be a great time. Check it out. Discord below. I'll see you there.